the United States of America for decades, Treasuries were seen as the safest gold standard of global finance.
The new year raises big questions for major economies around the world. What is the outlook for growth in 2025? With the breaking news, a fresh trade war between the US and China has just kicked off.
Traders may want to put on their hard hats. That's because US markets picked up where Japan left off, and the global stock market.
Tariffs 25% on Canada and 25% on Mexico, and that'll start.
A wave of bond sales from 16 allied countries, ranging from Japan to Saudi Arabia and even Britain, suggests that Washington's long-standing financial credibility may be in question. Some wonder whether the world's largest economy, the champion of the Petrodollar system, is facing a rupture that seemed unthinkable just a few years ago. Could this be the first real sign that America's unrivaled energy dominance and financial power are entering a new phase? Interest rates are rising, U.S. public debt continues to swell, and allies that once eagerly held vast reserves of U.S. bonds now appear to be seeking safer or more profitable alternatives. Is this merely a reaction to short-term market volatility, or the beginning of a broader shift away from the dollar-based system? As Washington seeks to project confidence, the lure of alternative reserves, gold, the yuan, and even cryptocurrencies is gaining global traction. Saudi Arabia's pivot to China, Japan's portfolio realignment, and the United Kingdom's post-Brexit financial strategy are all converging, creating a complex challenge to American hegemony. The question now is whether these bond sales will escalate into a full-fledged crisis, driving up U.S. borrowing costs and fueling uncertainty far beyond its borders. Let's take a closer look behind the scenes of this dramatic development. For decades, U.S. Treasuries were the ultimate safe haven, held in massive quantities by allies like Japan, Saudi Arabia, and the UK. They weren't just financial assets. They were a symbol of trust in the American-led system. But that trust is now crumbling. Recent data reveals a shocking trend. Japan is slashing its bond holdings at breakneck speed. Saudi Arabia is reportedly dumping U.S. bonds amid rising political tensions. And even the UK is quietly offloading its stock. The sell-off is accelerating. Why? The first red flag: America's ballooning budget deficit and crushing public debt. The reliability of U.S. Treasuries, a debate that never quite goes away, is once again front and center. Rising interest rates mean bond values are falling, pushing countries to cut their losses rather than hold sinking assets. But there's an even bigger threat looming: a crisis of confidence in the U.S. dollar itself. Some experts warn the world is actively seeking alternatives, from gold reserves to crypto assets. Even the once untouchable petrodollar system is reportedly being reconsidered by Saudi Arabia. Meanwhile, the Federal Reserve's aggressive rate hikes, meant to curb inflation, have had unintended consequences, making existing bond holdings less attractive and accelerating the exodus. The result? A staggering collective sell-off by 16 U.S. allies, triggering panic in Washington. If this trend continues, could the global financial order be on the verge of a seismic shift? The global sell-off of U.S. bonds is snowballing, both economically and diplomatically. When one country offloads its holdings, others take notice and follow suit. If this trend continues, U.S. borrowing costs could skyrocket, and Washington could find itself facing a budget crisis fueled by external forces. Some still argue that the U.S. dollar remains the world's ultimate reserve currency, too entrenched to abandon completely. But cracks are forming. The debt ceiling standoffs of 2023 to 2025, the Biden administration's high spending, and Washington's increasingly unpredictable foreign policy are shaking confidence, even among close allies. The idea that America is always a safe haven isn't as rock-solid as it once was. The political fallout. For Saudi Arabia, U.S. bonds were more than just financial assets. They were strategic leverage. But recent clashes with Washington over OPEC, plus policies, human rights, and regional conflicts have pushed Riyadh to rethink its alignment. Across the Gulf, from the UAE to Qatar, a new sentiment is emerging. It's time to deepen ties with China and Russia. The message: U.S. dollar bonds aren't untouchable anymore. Japan, however, presents a different story. For years, Tokyo was the biggest buyer of U.S. Treasuries, even as a weakening yen made those purchases costly. But now, with a shift toward aggressive economic policies, higher defense spending, and a rising interest rate environment, Japan is quietly scaling back its bond holdings. The bottom line? This isn't just an economic shift. It's a geopolitical realignment. And if the trend keeps accelerating, Washington may soon find itself scrambling to regain trust in its financial and diplomatic dominance. Cracks in the alliance, a shift away from U.S. bonds. The U.S.'s tough stance on China in the Asia-Pacific is reshaping regional dynamics, and not necessarily in its favor. Japan, one of Washington's most crucial allies, seems to be rethinking its strategy. Instead of doubling down on U.S. bonds, Tokyo might be opting for a more balanced approach. Diversify, hedge, and reduce over-reliance on a single player. But is this purely economic, or is Japan sending a political message? Even more striking is the UK's participation in the bond sell-off. Some joke that even America's own mother is abandoning it. London, once Washington's closest financial and diplomatic partner, is now prioritizing its own post-Brexit strategy. Strengthening its financial center, exploring alternative investments, and diversifying its foreign reserves, these moves suggest that Britain, like Japan, might not see U.S. leadership as indispensable as it once was. A market shift or the start of a bigger crisis? Washington is trying to downplay concerns. The U.S. Treasury insists, we still have the deepest and most liquid bond market in the world. Small fluctuations are normal. But is this really just a fluctuation? Or is it the first tremor of a major financial earthquake? The timing is uncanny. 16 allies selling off bonds at once. Each country has its own reasons, but the cumulative effect is turning into a wave. And the fear is spreading. If U.S. interest rates continue to rise, developing nations reliant on dollar financing could face severe economic pressure, raising the risk of a global recession. A domino effect could be in play. Of course, not everyone is sounding the alarm. Some argue that while the U.S. may face short-term turbulence, the dollar remains the world's dominant reserve currency. America's economic, military, and technological strength is still unmatched. The bond sell-off, they say, is cyclical, not a sign of collapse. But as global confidence shifts, one thing is certain. No one is as comfortable betting on U.S. dominance as they once were. Is the dollar era nearing its end? China and Russia are stockpiling gold. BRICS nations are pushing for a non-dollar payment system. Gulf countries are eyeing yuan-based oil sales. These trends have already raised serious questions about the future of U.S. dollar dominance. Now, with 16 key allies dumping U.S. bonds, those alarm bells are ringing even louder. The Biden administration is backing the Federal Reserve's efforts to tame inflation while focusing on stable growth and resolving the debt ceiling crisis. But are U.S. allies quietly looking for their own way out? Washington has long reassured the world, our debt is the safest investment because we always pay it back. But recent debt ceiling showdowns, near government shutdowns, and credit rating downgrades have shaken that confidence. Allies from Japan to Saudi Arabia have watched America's domestic political drama unfold and are now asking, is it time for an exit strategy? A U.S. collapse may be an exaggeration, but the once unshakable trust in dollar bonds? That's fading fast. The geopolitical shift. Is U.S. dominance fading? Let's wrap up with the bigger picture. Saudi Arabia is deepening its energy ties with China, fueling speculation about the future of the petrodollar. Japan, despite its tensions with Beijing, remains economically reliant on the massive Chinese market. Europe, while currently aligned with the U.S. due to the energy crisis and the war in Ukraine, is still pursuing long-term strategic autonomy. Meanwhile, post-Brexit Britain is searching for its new global identity. All of this points to a crucial reality. The U.S. remains a major power, but it's no longer the undisputed leader of the world. The wave of bond sell-offs is a financial reflection of this shifting balance. It's a complex, multi-dimensional chess game. So where does it lead? Are these bond sales by U.S. allies a warning sign of a major collapse, or are they simply a reaction to market forces and interest rate hikes? Can any alternative truly replace the dollar as the world's reserve currency, or will its throne be shaken but not toppled? Some argue that a nation drowning in debt can't be trusted forever, and that the world must transition to a new system. Others believe the panic is overblown. America has always found a way to bounce back. What do you think? Share your thoughts in the comments, and don't forget to subscribe, turn on notifications, and hit that like button to stay updated. Until next time, thanks for watching.